Hello and welcome to my YouTube channel. How are you? Okay, um, let's discuss IAS 40. Today's lecture will be regarding IAS 40. I know it's been a while. I was quite busy from last couple of weeks. I could not record any lecture for ACCA. We almost done with the F7 anyway. Only two or three lecture maximum left. Okay, let's discuss IAS 40, which is investment property. Let me tell you, if I'll just give you a few examples on what things IAS 40 will apply. First is, if you have any property for routine sale. If you have property for routine sale, let me write property. If you have a property for rent, like if you have a property and you want to let it for rent, then you apply IAS 40 on this. If you have any property but you give this property, you dedicate this property to earn rent, so then this will be, you will apply IAS 40 on this property. But if you have, this is your ordinary course of business, that you buy property and sell it, then it means it is your ordinary course of your business. If it is your ordinary course of business, then you will apply IAS to inventory, because in this way you will consider this as your inventory. But if you buy property and you give this property for to earn rent, then you apply IAS 40 in this. But if you are constructing property for third party, if you are constructing something for the third party, if you're constructing a property for third party, then you book your revenue as per IFRS 15 revenue, because this, you are not the original owner, and you know you are not going to use this property to earn rent or to sell it. You are doing some work for someone else, so you book your revenue as per IFRS 15. If you are constructing your property, if you are constructing property for future business or to keep, if you are, and if you're constructing a property and you know that in future you're gonna use it for your business, or you're gonna keep it, then you will apply IAS 16, IAS 16, which is PPE. Yeah, because your intention in future is to keep it, is to do the business with it. So it means this during the construction even you apply IAS 16. But if you're constructing I misspelled here, just excuse my spelling, it's just constructing. If you're constructing, if you're constructing a property for future investment, but if your intention is that you are constructing a property to give this to earn rent money, or to dedicate this property to earn rent, it means you consider this as investment property, then you apply IAS 40 in this. Even during the construction you apply IAS 40. But there is a matter, if you have a land and it is not being decided yet whether you're gonna use, if you have a land, either you can use it for yourself, self use, or rent. I There are only two ways you can get benefit. Either you're gonna sell it, or either you're gonna keep it. If you're gonna keep it, then you're gonna keep it for yourself, or you're gonna make a property, or you're gonna make a building and then give this building on rent to earn rent money. There are only two ways to use this land. If you are confused that you don't know even whether you're gonna be the future use, then in this way IAS standard says you apply IAS 40 for undecided land, undecided use of land. If you do not know what use you're gonna use, what use you're gonna have with this land, you don't know at this point, then I standard says I keep this in IAS 40, investment property. But if you have, suppose if you have a building, suppose I have this building, I have floor 1, floor 1, floor 2, floor 3. I have 3 floors. Suppose this is my for myself, this is for my business. Okay, I'm using this as my business. Floor 2, I give this for rent, I am earning rent. And floor 3 is just undecided yet. Suppose, first example, if I have a building, and on this building I have 3 floors. Floor 1, I have floor 1 with me for my own business. So in this IAS 16, individually, if I consider individually, floor 2 rent money, so IAS 40, and this is undecided yet. So in this way, what standard you're gonna use on this building? There is an exception here. If you have a lease, separate lease for these two, or if these two can be sold separately, if these two conditions are met, then you can apply their respective standards. Like floor 1 you can apply IAS 16, and on floor 2 for rent you can apply IAS 40. But the condition has to met. The two conditions are sold separately, which can be sold separately, and second condition is lease separately. If you have separate leased for these two, and you can sell these two into different things in two different way, then only you can apply their standards. Suppose in consolidation, suppose if parent company has one asset, building, suppose this is a building, or suppose land, and it sells this to subsidiary company. If see, individually books, it is considering IAS 16, because individually parent company keeps this building as per IAS 16, and for because it is giving rent, so individually it will be IAS 40 because it's giving a rent on this. And here IAS 16, subsidiary company will be make generating or using itself. If a subsidiary company keeps this for their self, then they are using IAS 16, but parent company using IAS 40. but individually as a group, if we see as a group, it is a same part, it is one of the group, it is a property within the group, then IS 16. For consolidated purposes, we will apply consolidated purposes. We apply IS 16 because both is same. It falls under the same company. But individual books, IAS 40 and IAS 16 PPE. But as part of the group, it is the same group within the sale is within the company, so this is going to be IS 16. Suppose if you have a building like this, and you are earning, suppose this much is for the rent, suppose this much is your rent, which is 10,000, suppose, and the rest is you will apply IAS 40, and you want to see which standard you want to apply. IAS 16, this is with you, this is you are with your business, which is your PPE. So in this portion you are earning rent, which is 10,000, but for this purpose, for the business use is suppose you have 100,000 income from there. It means IAS 16 is more significant, then apply IAS 16 on all of this, because there's a significant amount is coming from IAS 16 from your use. So keep this as under IAS 16. IAS 40, there are two models. One is cost model and one is fair value model. If it is cost model, then you just need to change the name. Just change the name. Accounting treatment is same. Just change the name to from IAS 16 to IAS 40, which is from PPE to change it to investment property. That's it. If the previous company is using cost model, then you just need to change the IAS standard only, investment property. And fair value, for the fair value, I will explain you with the example anyway, but I'm just giving you the writing you the scenarios. If it is cost model, then cost less accumulated depreciation, and then change the name to change the standard, change the name only, which is I told you this. But if you are using fair value model, then record fair value, then all changes taken to P&L. In cost model, if you are using IAS 16, all the changes goes to fair value, changes up and down will go to OCI or revaluation reserve. But here all changes will go to, in IAS 40, all changes go to profit and loss, and then no depreciation to be charged. No depreciation. You don't need to charge depreciation if you're using a fair value model of IAS 40, because the depreciation will be automatically calculated. Suppose, is it allowed to change IAS 16 to IAS 40 or IAS 40 to IAS 16? Is it allowed? The question is yes, it is allowed. And suppose I have this building, I have this building. Suppose if I have this building and it is under me, I was using it for my business. If it is with me, then I was using IS 16 and PP. This is my property, plant and equipment, and I record this as per IS 16. But after 1 year, after 1 year, I gave this building to company, suppose ABC company. I sold it to ABC on rent. I give it to on rent. I did not sell it. I give it on rent. I let this property out, and I am earning. I'm not using this anymore for my own business. I started it rental income, so I get rental income from ABC company. Now I must apply IAS 40. Same goes if I was if I suppose just to make changes, I was earning rent before I was applying IS 40, and then I give the money to the my tenant. I said I'm gonna keep it. I give you 6 months time, empty my property, I will start my own business here. So when I will get the key, when I will start using it, I will change it to IS for 16. I will change the standard, because now I am not earning any rental money from it. I am keeping this property for myself. Can a company change the model? Before they were using cost model, and now they want to use a fair value model. Let me write in. Is it allowed to change the model? Previously we were using cost model, and now we change it to cost model. Now we change it to fair value model. Is it allowed? Yes, it is allowed, but there is a condition that this change represent the relevance, increase the relevance, and increase the productivity and clearance and reliability and presentation of the financial statement. It is allowed if, yes, it is allowed if that change increases relevance, reliability, and presentation of the you can, if you were using cost model in IAS 40 and you want to use fair value model, then you can switch the model, you can use the new model, but the condition is if this change increases the relevance, reliability, and presentation of the fair financial statement. If you have increased in if you have increased in relevance, reliability was being increased, efficiency was being increased, then only you are allowed. But previously, before this tender, previously you cannot do the cherry picking. Like what does it mean? That if you have a property in say if you have a property in best area of Pakistan, which is Islamabad, I guess. Suppose if you have a property in Islamabad and you have a property in suppose one city, like a small city, let's say any small city like Okada, suppose. If you have if you have a property in Islamabad, or if you have a property in Okada, there are two different cities. Same if you have a property in London and you have a property in Manchester. So before the standard, the like creative accountant was doing that, they were applying IAS 40 on these, and then they were applying IAS 16 on these property, different property, different scenarios, because, or they were using IAS 16 here and then IAS 40 here, because uh, all the changes, if PPE means PPE 16, which is IAS 16, all the changes goes to OCI reserve, and all the changes in IAS goes to, all the changes in IAS 40 goes to profit and loss. If they want to increase their liquidity or their ratios, if they want to show the best profit, they switch it to IAS 40 or IAS 16 differently. But now standard says, if you're applying IAS 16 for one kind of property, then you must apply IAS 16 for all of the property you have. You cannot do the cherry picking. Now let's do some examples. Let's say case 1 question: if cost model is used, if the cost was model was being used in IAS 40, suppose year 0 you have and the life is 10 years, you have a property, cost of property is 1000, and after year 1, if we want, I can write the date: 1st Jan 09, 31st December 09, after 1 year. How you will book the depreciation? The depreciation will be 1000 divided by 10 minus scrap value. If we have any, we don't have any scrap value, so 1000 minus no scrap value divided by 10, it means 100 is your depreciation each month. So for this month, the depreciation is 100. The net book value on this point will be 1000 cost minus depreciation, which is equal to 100. So it means the net book value is 900 at this point. All you have to do is just, and you are using cost model, and you keep this way, the depreciation, everything will be on the same route, because you are the company was using cost model. Just change the name to investment property. So change the name. So what entry you will pass, you need to say bye bye to property, plant and equipment, debit plant and equipment, and credit investment property. Wait, let me see. If the company was using IS 40 and they are changing into IS 16, yeah. If the company previously they were using IS 40, now they are switching to IAS 16. If they are changing to IS 16, then and the company is using cost model, then just change the name to PPE. So we will increase the PPE with 900, and we credit investment property 900. And suppose if we were using a fair value, you are using fair value model and we are changing to IAS 16 to IAS 40, if we are going to use IAS 40, suppose the same question, cost is 1000, life 10 years, in 31st December x9, net book value will be, after depreciation is 100 as we have calculated before, net book value will be 900. But if we say market value increases to 1200, the net book value will be 900 but market value is showing 1200, then previously we were using 16, so we will book this market value, we will because we were using IAS 16 before, then we're gonna revalue the product within IAS 16 before changing to IAS 40. So all the changes goes to revaluation reserve and revalued by 300. If this asset was revalued by 300 and if we were using IAS 16 before, then we will revalue this asset as per our previous standard, and then we will change to the new standard. We were using PPE before, then increase PPE by 300 and credit revaluation reserve, because all the changes goes to revaluation reserve. $300, and then we will switch to IAS 40. Now we will change to IAS 40. Then we will say high to investment property, we will increase investment property by 1200. This is our 1200, and then credit PPE. Now we will change to, now we will pass this entry to change the standard. We will say high to investment property, we will bring this in life, and then we will say bye bye to plant and equipment, because we are not using IAS 14 anymore, so we are not using IAS 16 anymore, so we will de-recognize our property, plant and equipment, and we will recognize and we will say hi to investment property. And suppose if any value, if after this any increase or decrease in value will be taken to profit and loss. Suppose if we have 300, after this if we have 200, suppose 200 revaluation, if we have 200 revaluation after this point, revalued 200 in next year, and then we will book this as investment property, we will increase investment property by 200, and we will credit profit and loss, because all the changes goes to profit and loss in IAS 40. This is IAS 40. This is IAS 16. So this is my point. Before, in a revaluation model, you don't, after this point, you don't need to calculate any depreciation, because that depreciation will be calculated automatically. So this is the main point. If you were using fair value and you are changing from IAS 16 to IAS 40, then book all the revaluation as per the previous standard, and after revaluation change the standard. This question was IAS 16 to IAS 40. Now I will do one more question. In this question I will change IAS 40 to IAS 16. Suppose we were using IAS 40 for rent. Now we kick our tenant out. We said I am gonna keep this business for myself. Then we will apply IAS 16. Suppose the question is 1st January x9, cost is 1000, life is 10 years. in this 31st December X9 after 1 year. Here fair value is 1200, and previously company was using fair value model, so what we're gonna do is we are changing at this point, till this point, IAS from 1 X9 till 31st December X9 IAS 40. After this point IAS 16. So we will book this fair value as per previous standard. So previous standard was investment property. So previously we were using this investment property. Previously it was 1000, now increased by 200, revalued by 200, and all the changes goes to profit and loss, credit profit and loss. And now we will start calculating. This is IAS 40. Now we are changing to IAS 16. Now what we will do is we will de-recognize this investment property, will be credited, because we are not gonna use investment property now. So investment property is 1200, this is 1200, and now we will debit profit. Now we will debit PPE, which is IAS 16 PPE, which is 1200. So this is the way we switch. So before we change the standard to the new one, we will all the changes goes to the as per the previous. We will revalue as using previous model, and then we will change the standard. So previously we were using investment property, and investment property all changes goes to profit and loss. And suppose after this point any changes in fair value will be taken to revaluation reserve as per PPE, which is IAS 16. So this is our standard. If you have any question, you can leave in a comment and I will record anything for you. You can listen the same lecture over and over again until you understand. So I have given you all the possible example, and I have showed you all the standard IAS 16, IAS 40 and everything. Just don't know. Thank you for watching my channel, and please do recommend your friends to subscribe my channel, and let me know on what topic you want me to make a video, or on what standard you want me to make a video on. Thank you for watching. Thank you. Bye.